Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that we have a market which at the moment is testing a quite strong historical structure level for this market. In fact, this zone was acting as previous monthly resistance. Starting from here, multiple times the market tested and rejected this level to the downside. And what we know is that previous resistance, after it is broken to the upside, and the market did break it to the upside with this impulse here, is turned support. So all this previous resistance, once it was broken to the upside here, was turned support. The market went and tested here the previous monthly resistance, turned support, and rejected it to the upside, which is what you would usually expect in a situation like this. We can also notice that from a pattern standpoint, if we zoom in here at the most recent price action, if we look at what has been happening here, we can easily notice that the pattern that the market was creating was an impulse correction and impulse pattern to the upside. And in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And what we can see here is that the zone that the market tested and rejected was in fact exactly the area in between the 0.32 and 50% Fibonacci retracements, which is a confluence of support zone because we had the Fibonacci level exactly in the same area of price of the previous resistance turned support. And inside of a confluence of support area, you would expect to see more institutional longing. And we will be speaking about institutional longing in just a few minutes as we progress with the analysis. Now, going step by step, let's go down on the weekly time frame and see what we have at the moment from a weekly standpoint. Now, here on the weekly, the situation is actually extremely clear, and there's a very simple price action to read. This zone here is the previous level of weekly resistance, which was turned support here, and again here, and the market rejected it to the upside with a very strong impulse. Now, after the creation of an impulse, as we have just identified, what we would expect is first a correction and then the continuation higher. And here on the weekly time frame, if we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse leg. And this shows us how we have a 0.32 Fibonacci retracement lining up around this area, which is also this previous resistance from which all this rejection to the downside was created. So what we could expect here is a potential correction to this zone and then to see more potential bullish continuation being created. So at least so far, by looking at the monthly and weekly timeframes, it seems like we have good probability of seeing short-term bearish price action and then longer-term bullish continuation. Now, going down on the daily time frame, what do we see? Well, from a daily perspective, first of all, I did speak about gold a couple of times in the past already. I spoke about it when the market was around this area. I explained all the reasons for which we could expect this rejection higher. And then after the market broke above this previous daily resistance turned support and the market was here, I explained all the reasons for which we could expect the rejection to the upside away from the level. And again, that is exactly what the market gave us. And by the way, I will link in description those two previous analyses so you can go and check them out for more free education. Now, at the moment, from a daily perspective, we indeed have a quite interesting situation because if we follow the pattern, we had an impulse to the upside, a correction, the market tried continuing higher, and currently it seems like it's trying to continue lower. Now, if the market from here will actually go lower, we will have the creation of a daily M pattern. And in general, as I explained many times, after the creation of an M pattern, you would expect the market to create a rejection higher for the completion of the M pattern at the neckline, which is the previous support turned resistance from a daily standpoint. So what we could expect here is first some short-term bearish price action and then a rejection to the upside, at least for the completion of this M pattern at the neckline. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing here on gold, the first thing that we have to notice is that if we're checking the data for gold, we are already checking gold USD because every currency and also commodity is traded on the spot against the USD. So the data here, which seems to be only for gold, is actually already gold USD. So exactly what we are analyzing. And what we can notice here is that with the last reports, net positions have massively increased. We went from having 131.1k net positions up to having 191.2k net positions. So institutions clearly are moving back to the bullish side for gold. So institutions are adding longs and closing shorts. 49.2k longs added with the last report to be precise, and 500 shorts getting closed. So as institutions are moving back to the bullish side for gold, so they have been longing inside of that confluence of support that we have previously identified on the monthly time frame, this increases the probability of seeing more bullish price action, especially if the market will actually create the M pattern that we were identifying just a few seconds ago on the daily time frame. And by the way, if you still haven't, make sure that you join my free Telegram channel. You find it here on the screen and also in the description, so you never miss new updates. Continuing with the analysis, let's keep in mind that institutions are adding longs, and let's move back to the technical aspect. Now, in a situation like this, as we were saying, we could expect the market to create a rejection to the downside. Now, if the market will actually create this rejection to the downside, that is where gold gets very interesting because we would have an M pattern, so a bullish pattern from a daily standpoint, and institutions are already adding longs. So if we get a bullish pattern, there is increased probability of getting more institutional longing, which at that point would further increase the probabilities of a potential push higher, at least for the completion of the daily M pattern at the neckline with good probabilities. So what would I expect in a situation like this? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, at that point, I wouldn't be surprised to see a potential push higher, completing this daily M pattern at the neckline. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and on the main page of my YouTube channel. Here, you have the possibility to gain access to the most complete, all-inclusive mentorship program that I have created for you. As soon as you open the website, you will see this video breaking down everything included in the mentorship program. And in the program, you have the possibility to gain access to all my courses and also to the software, so the COT data software, which is exactly the one that we used in this analysis, the trading station software with Telegram signals integration, which puts together everything that you need as a trader all in one interface. You also have the possibility to gain access to one-on-one private mentoring directly with me, so you will have my personal contact. And if you continue to scroll down on the website, you will see that directly from the website, you will have the possibility to register and gain automatically access with the email and password that you will create during the registration process. So at least I suggest that you go and check it out right now. The link is both in description and in the main page of my YouTube channel, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.